We're here together with Jack Markle from GC Accountants down in Palms Green. They've been our trusted advisors ever since we started with Base Property back in 2004. Can you believe that, Jack? 21 years.
No.
We're still sat here together.
We are. That's
Now, today we're going to be talking a bit about how we have worked together in terms of our businesses, but also you've obviously started representing a lot of our overseas landlords, non-resident landlords, all the things that you have taught us over the years that we have to look out for. Probably touch a bit on the lovely budget of yesterday and what that means for our clients.
Yep.
And making tax digital.
The big change,
the next big
the
change
next
that
big
we
change
need to
next year.
talk about.
Yes. Yeah.
Yes.
Well, just a quick note for us. Yes, GT Accountants. We've been with Base Property over 20 years now. We've been established for over 40 years in Palms Green, North London. Qualified accountants, registered with the ACCA, registered auditors. We deal with a few estate agents, not just Base. So we do have a good knowledge on estate agent matters. We deal with many landlords, both in the UK and abroad. And yes, changes over the last few years, affecting a lot of landlords, and also the estate agency business and the letting agency business. So it is a lot of changes going on, which people do need to plan ahead for, because if you do not plan ahead, then there could be trouble ahead.
Yeah, I think that is definitely how we see the industry change. Like over all the years we have been agents in terms of, legislation, whether that is about tax, but obviously also all the rules that we have to follow. But everything is becoming much more traceable.
Yes, very
right?
true. Yeah.
So it's all about recording, making sure that you are protecting and that you are working together with the right providers who are not only going to protect your best interest, but who are also going to guide you along that way.
Agreed. And I think that's the great thing about what I see with what Base Property do as well. Your social media, your updates, the blogs that you do, constantly keeping people updated. Because like we said earlier, there are so many changes coming in non-stop. But if I click on Facebook, Twitter, you guys are there keeping people informed all the time, which is absolutely great. And they have to be nowadays. They do have to be, both for their own sake of mind, not just as landlords, but also for tax purposes with the HMRC, to make sure that they're covered.
Having touched upon the tax now, obviously we had the budget yesterday.
We did.
The budget of 2025 came through. Changes there were obviously on property income, 2% tax increase, is that right?
It's a 2% tax increase from April 2027. So the basic rate and higher rate will go up by 2%. And the rumours were national insurance.
Yeah.
Right. The difference between tax and national insurance, if it was national insurance, then people on pensions wouldn't be affected because they don't pay national insurance. But putting the tax on
the rental,
it takes everybody. Everybody's included in that, so it's a bit more income for the government rather than just putting it on national insurance.
Okay.
Which was a bit of a clever move by them. And I sort of clocked on that this morning when I was looking through.
Of course. But this will only come in 2027.
April 2027 is the so there's the increase in the dividend rate as well, tax and savings, so income tax and savings rate.
Okay. Now there was also another charge that they are talking about, the £2 million properties that are going to get. Is it an increased council tax ban, or how are they going?
It's like a council tax, yeah. It's called a mansion tax. So anybody that owns a property above 2 million.
Which in London,
yep.
would not necessarily be deemed a mansion.
Yeah, exactly. Prices are going up and up and up constantly in London.
But is it based on a valuation of 2025, or will it go back to the valuations?
I think it's 2025. We'll have to see. I mean, we're just waiting for the final
They haven't said it yet.
paperwork, which we should get, I mean, today, tomorrow, in the next couple of days. So, I mean, we listened to the budget yesterday. We had a very quick look at the outlines of it yesterday. But once you get we're waiting for the fine print for absolutely everything. I'm sure there's other little bits and pieces that will come up that Rachel
Sure.
Reeves didn't mention yesterday, and we'd be like, oh, because there's always a lot more in the actual budget paperwork
Yes,
than what's said
yes,
in the
of course.
Commons.
Now, of course, the 2% increase on the rate of income tax on the rental income, that is going to be the pinch for the landlords. Of course, if you have a property with service charges, mortgage payments, ground rents,
It's another pinch. It's like what you've said. Over the last few years, there was the 10% wear and tear allowance, which disappeared a few years ago. The mortgage,
the interest
the
payments
mortgage
that
interest
were,
payments, which
yeah,
you can't offset, which has also put a lot of people now into the high rates, because before the mortgage interest would come off your income, there were a lot of people within that band.
yeah,
But now the mortgage interest does not come off; it gets taken off as a tax credit, 20% of it only, which has pushed a lot of people into the high rate. Which
course.
again, it's not just the reduction in what you can claim. It's also people thinking, well, hold on a minute, I'm paying 40% on a lot more of my rental profit than I was on the 20.
Absolutely. And, you know, the result will be that rents will go up. I mean, you know, a lot of our landlords are talking about tapping out, you know,
Yes.
kind of when the margins get too slim. And I know that there is a whole group that is kind of, oh, don't really feel too bad about landlords, but then the average landlord is not necessarily, you know, a multi-millionaire sat with on his yacht in the Med. I mean,
Well,
they're
this-
average people who end up with an extra property either through, you know, saving or getting married and having a second property that they then end up renting.
Exactly, and this is the perception a lot of people have got about landlords. People are thinking, oh, landlords are multi-millionaires and they're making money hand over fist by renting properties.
But that's not the case.
Most of the cases, that's not the case at all. And the way that the tax rules are at the moment, and with the mortgage, I mean, anybody that's on the mortgage repayment now, not just paying interest, once they've paid their tax, once they've paid their mortgage, if they're actually losing money year in, year out.
And look, in the past, I remember being that appraisal agent going out saying to a client, look, even if you had to pay in £100 into your bank account every month, and in 25 years, I'm going to tell you, you have made £250,000 or whatever it is, you are going to happily pay that out. But as we all know, capital gains and I'm talking in London, obviously, always. I've got to put the caveat on that, but you know, capital gains isn't there either, and obviously that is then again taxed.
Exactly. You've got the capital gains tax, you've got inheritance tax to think about in the future. I mean, we do a lot of future planning for clients, especially in the last year or two. Now that capital gains tax rates have gone up, inheritance tax rumours are changing all the time about that.
Because obviously it's not just property; it's now pensions that are going to be thrown in.
Everything included. So you've got to have a full picture of a client's income, expenses, assets, liabilities. You've got to have that full picture. I mean, sometimes I'll get a phone call from someone, how much will this cost me if I do this? But you have to have the full picture. But everything taxes will be going up. Capital gains tax. It's a lot of clients, landlords, it's that, do I sell now if I want to sell and pay the capital gains tax, or do I leave it to my children and then they have to pay the inheritance tax if it's passed on to them? A lot of landlords now want to give their children something either in cash or assets.
Yeah. Obviously help them on to the property ladder while, you know, they are still young enough.
Exactly.
Rather than wait till much later on.
Yes. But then we've seen, I mean, a lot of the younger generation now, I mean, trying to purchase their first property is hard enough.
Of course.
You don't see many of the younger generation now buying a second, third property, especially with the increase in stamp duty as well. If you own a second property. So,
I mean, again, all the regulations, the taxation, to a certain extent, it does sometimes make it easier to consider investing in stocks and shares than it is in property.
Again, yes, it's the other question that we have. So once we get clients calling us saying, look, can you do a calculation? Can you work out for me if I do sell the property and if I do invest in something else, would I be better off?
Sure. Now, look, as a property company, 21 years in, you know, there was once a landlord who gave me one very good bit of advice, and he did tell me, he said, it is an economic cycle on. It doesn't just keep climbing. Things come down, it comes back up, it goes around. And he's been a landlord since the 70s, so he has seen all the different stages. But what I think this latest changes in legislation under the Renters' Right Act and everything will do, it will clean up the industry in that it will become a much more service-oriented industry, in that you have to see it as a business. So accidental landlords, I think we will see more tapping out. But there is still a very big place for the private rental sector.
Yeah, I totally agree. And this is why your work is so important in helping landlords and keeping people up to date, especially what you just mentioned there, the new acts that are coming in, and that's why us as accountants are important to help and advise
Of course.
As many people as possible. I mean, you need, I think nowadays especially, you need as much professional advice.
And this brings us perfectly onto Making Tax Digital, because this is, you know, not necessarily really talked about. I remember we talked about this, I think, way back in 2018 or something.
Probably that's the first time it was probably mentioned.
And then I remember chasing you guys every year, like, Jack, have we had an update? Oh no, it's been pushed, but it finally is here. So it will be from 2026 as well.
So from April 2026, anybody with rental income above £50,000, that's income, not profit.
Okay.
And also self-employed people.
Yeah, because that is a bit of a trick there, right? Isn't it?
Yes.
If you are self-employed and then have a rental property, that all comes together and will definitely get you over the 50.
Yes.
But if you're PAYE, it doesn't.
If you're PAYE, that's separate. So if you're under PAYE and employed and you receive rental of 40,000 income, you're not included from April 26.
But you will be from April 27.
So from April 27, it goes down to 30,000, and from 28, 20,000.
So basically, anybody with a property,
and the rumours are after that that everybody will have to.
And so Making Tax Digital means that landlords will have to report quarterly online. So
it is quarterly returns. It's that word digital, which is the main word. So specialist tax software has to be used to file returns. So you won't be able to file through the HMRC. I think they're trying to get something through, but even that hasn't been finalised yet.
Knowing how great their infrastructure
I mean, this is one of the reasons why it's been delayed for so many years. I mean, there was COVID, but because software wasn't available, etc. So clients will have to pay for additional software to file their returns. It will be a quarterly return just for the rental income and expenses. So you won't be putting all your employment income in. If you have dividend income, it will just be for the rental. So that will be quarterly return. You don't have to pay your tax quarterly. That will still stay the same. That will stay January and July if you have payments on account to make. So it will be 4 returns, and then a 5th return, which will be the 4 combined. And then a 6th final tax return, which is the tax return you complete at the moment, which has any other income, which has, if you've got PAYE income, investment, any other income, dividend income. So it potentially is 6 returns that you have to file a year. And the digital side of it, what the revenue are now wanting, and what we are advising clients now, is to have a separate bank account for your rental income, because what's happening is the bank account feeds into the software. So if you have a bank account which you have hundreds and hundreds of your personal transactions, all that gets fed in, and it will be a nightmare for us It'll be a nightmare for some landlords will want to do this themselves, not a problem. But then it will be a nightmare to, okay, what's rental? What are my rental expenses? But everything will be on the system. So we are advising clients to have a separate bank account. Any expenses that do not get paid through that account, they will have to have proof of
Sure.
where those expenses have come from. So if you've paid from a private bank account, if you've paid cash some clients will pay cash for some building works, repairs, maintenance, you will have to have proof where that cash came from and who it was paid, how it was paid. So I think that's one of the biggest changes. So what the revenue are trying to do is get everything going through one bank account, income, expenses, and that's it. So it will be a big change for
something to
I
be
think
look forward to.
a culture change as well.
Exactly.
But
again, that is why we will advise people to come and find Jack Marco.
Yes,
GC
available.
Accountants,
Yes.
available to help where and when he can.
Give us a shout. We're there to help. I mean, like I said, we've been doing personal tax returns for years and years. We've got landlords, and again, we touched on the non-resident landlords earlier. We deal a lot with non-resident landlords again. Who, if you're non-resident and you have a property in the UK, you have to pay tax on that.
Absolutely.
So we deal with people all around. We've got people all around the world, as you know, landlords plus other clients that we deal with. But many changes. We're glad they're starting at the 50,000 threshold, so that will give us a little bit of time to get into it. But word of warning from now: if anybody is earning over 50,000, either contact your accountant, get them, contact us, because you can't leave it until April.
No.
Or you can't the first 3 months and then say, oh my God. And the just on the last point on making tax digital, the Inland Revenue will be imposing fines, penalties,
of course,
on late submissions. It's going to be on a points basis.
Okay.
From what we've heard, they will not be charging in the first year. But they will keep a tab,
of course,
of it, and then if you're late, so there will be fines, penalties imposed, and some of the fines, penalties imposed by the Inland Revenue these days are high. I mean, they're just trying to get as much money as they can. So it's an easy way for them to get money.
The joys.
Yeah. Yes.
But well, Jack, thank you so very much for being part of this chat today.
No problem.
It's been wonderful, as always, to talk to Jack. I always learn something new still after all these years. We're Base Property. We've been working with GC Accountants now, like I said, for 21 years. If there is anything to learn from this chat, I would say fail to prepare, prepare to fail. So make sure that you start talking to your agent, to your accountants, and that you get your ducks in a row.